Is there more pain on the menu for crypto markets? That's the focus of today's Daily Forecast on June the 15th, 2022. I'm Joel Flynn. Speculation continues about crypto firms' solvency, and the US Fed could be about to make things tougher. We'll have more for you on what's happening at Tron, Coinbase, and Microstrategy, plus a look at what all this means for NFTs. So let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
There are growing worries about Tron's USDD stablecoin. It's been off its peg to the US dollar for about 2 days. Tron DAO said it's bolstered its USDC reserve by $500 million US. That's supposed to shore up its parity with the greenback. USDD uses an algorithmic mechanism to maintain its peg to the dollar by burning its TRX cryptocurrency. That's a model that mirrors the Terra UST. Tron's native TRX token was down 11% in the 24 hours to Wednesday morning Asia time, trading at 5 US cents. The crypto crash is already costing jobs. Coinbase is firing nearly a fifth of its workforce, thought to be around 1,100 people. CEO Brian Armstrong said in a blog post the layoffs were needed to ensure the company stays, quote, healthy during this economic downturn. The move will cost Coinbase around $45 million US, according to its own estimates. Coinbase shares are down around 86% just in the last 7 months. It comes after other crypto organizations also cut jobs. Those include Gemini, BlockFi, and Crypto.com. Meanwhile, Microstrategy won't face a margin call on a $200 million US loan. That's according to the business intelligence firm's boss, Michael Saylor. The company is the largest publicly traded holder of Bitcoin. Speculation about its leverage has grown after the value of its Bitcoin holdings dropped by over $1 billion US. Saylor tweeted, "When MicroStrategy adopted a Bitcoin strategy, it anticipated volatility and structured its balance sheet so that it can continue through adversity." Make sure you head to our website, Forkast.News, for the latest on MicroStrategy and indeed everything else on today's show. There's more risk on the table today. Markets are bracing for an interest rate increase by the US Federal Reserve, but is the crypto space really ready for it? Forecast's Lachlan Keller has more.
May's Fed minutes indicated that a 50 basis point rise would be likely both this month and next. However, last Friday's higher than expected inflation data not only sent both crypto and equities tumbling, it also saw many analysts raising their rate increase predictions, with some going as far as suggesting we could see a 100 basis point hike. But one expert told Forecast he doesn't expect anything too extreme today.
Some people are saying, the Fed's a little bit behind, it could do 100, the market's talking about it. But I think they want to try and show steady progress rather than trying to bring a moment of shock and awe to the market, because of, as we saw on Friday, if that happens, the markets tend to crash, and that's not good for anybody.
Whatever the move is, Sullivan says market reaction will depend on how Fed Chair Jerome Powell spells the decision out.
A lot of it will come down to however Powell explains it, but he's been very good at trying to give forward guidance, so that the markets don't get upset.
Sullivan says that while crypto newcomers may have tried to protect their wealth and sold Bitcoin off over the weekend, longer-term investors may have sensed an opportunity to buy. And though some to and fro is likely, he expects prices to rise longer term. Ben Caselin of crypto exchange AAX is also optimistic over Bitcoin, telling Forecast that while some are talking over crypto winter, seasons can easily be upset.
There's plenty that speaks to the fundamentals of Bitcoin, and it is a time, I would say, so we will see some dominance return to Bitcoin, and we'll see some kind of altcoins die off, as Do Kwon predicted, and rightfully so. That's what happens in these over-leveraged markets that are just tangled into kind of very complicated structures that feed off one another. That happens, and it's happened before, and now it's happening again.
Caselin says it's only a matter of time before the risks around Bitcoin itself are peeled away. He says expectations of approval for a Bitcoin spot ETF in the US and greater mainstream adoption both have the potential to send its price skyrocketing. For Forecast, I'm Lachlan Keller.
NFTs haven't fully escaped the market rout this week, but the sector hasn't yet seen losses on the scale of cryptocurrencies. Let's take a look at that in more detail with Yehuda Pecha, who's NFT relations strategist at CryptoSlam. Great to speak to you as always, Yehuda.
Hey, thanks for having me back. Thanks.
Listen, some of the major NFT collections are holding on a little bit despite severe pressure in the broader markets. What, in your opinion, explains this dichotomy?
Absolutely. I mean, really, I think NFTs are going to be impacted in the same way that we're seeing the crypto market be impacted by the whole market, the global market. NFT prices are going to come way down. I just think they're lagging a bit behind the typical, the cryptocurrencies. Volume's way down. It's going to be a struggle to find buyers right now until we find a floor price on these NFTs. And I think really until the crypto market itself settled. I don't think we're anywhere close to it. But at this time, there's still opportunities to buy NFTs that have utility that's valuable to you. Or buy crypto art that you love. Most NFT projects, though, I don't believe are going to survive this bear market. I think this is the big one. What's going to survive are historic NFTs with low supply, something like V1 CryptoPunks and the V2 CryptoPunks. And as far as newer projects that'll survive, it's going to be those projects that are building partnerships. Pixelvault has a new partnership with Major League Baseball and the UFC. Artifact is now owned by Nike, and I know the CyberKongs are head down building right now. So those are all NFT collectibles at this point that they're significant to tens of thousands of collectors, possibly even hundreds of thousands at this point. So those are the ones that will survive. But again, I expect the NFT landscape to look very, very different over the next few months.
And amid all this panic, is there a growing conversation to be had too about the endorsement of celebrities in the NFT space, in particular as we see more and more of them getting in every week? Do they hold a responsibility towards their fans in such times?
I sure think they do. And first off, I love seeing celebrities get into NFTs. Johnny Depp's been in for a while now. Jim Carrey bought his first NFT last week. When you have a guy of that caliber come in, it legitimizes NFTs to their fan base. And so to that end, I do think they bear a little responsibility. I hope they make some kind of effort to educate their fan base, or at least steer them towards education. Jim Carrey in particular, he doesn't do movies with guns or violence because he feels responsible to not put that type of content out there. And I hope he takes that same approach here with NFTs. And I think he will. He's already engaged with the community and the public via Twitter Spaces to talk about NFTs. And it's a great sign of how vocal and responsible he'll be.
We're also seeing more and more people commercializing their NFTs as well. Snoop Dogg, Seth Green, among others. What rights does owning an NFT give you? And where does CC0 fit into all of this?
Yeah, so it is common these days that owning an NFT means you have some limited rights to use the image of your NFT. So whether that's making merch that you can sell or making it the identity of your brand, but that's not necessarily CCO. CCO gives the entire public rights to do what they want with the art, not just the owners of those NFTs. So instead of a few thousand people having rights to create or brand using those images, anyone in the world can. And so CCO will lead to even more exposure for those specific NFT brands. I'm watching 3 of those in particular, 3 big CCO projects. There is Nouns, there's Cryptodes, and MFers. One or more of those could end up being the biggest brand in NFTs in the future. And because of CCO, it could really transcend anything we've seen to date. And I think the brand that's going to surpass the Bored Ape Yacht Club, besides probably CryptoPunks, it's likely going to be a CCO project. Seth Green, by the way, there's a bit of a happy ending to that story. He was able to actually buy his Bored Ape back. It was a little expensive at about $250,000, but he'll get to make that show of his that features his ape, and hopefully they'll live happily ever after together.
Yehuda, thanks so much, as always.
Oh, you're welcome.
All right, that's your daily forecast from Asia to the world. Do follow us on Twitter for the latest updates at Forkast_News. Head to our website as well for more detail on all of today's stories and more. Forkast.News. Until next time, I'm Forkast's Joel Flynn. I'll see you then.